Markets are near highs, but not everyone is buying this rally. Peter Schiff has been warning about a weaker dollar, higher gold, and real risk for equities. He joins us now. Peter Schiff, Chief Economist and Global Strategist at Europac.com. Thanks so much for being here.
Oh, my pleasure.
So we've heard a lot of bullish takes lately, Peter, so we thought it was time to bring on the other side. So to kick things off, tell us, what's the market getting wrong right here as it sits near all-time highs?
Well, I think investors have gotten a lot of things wrong, but that hasn't stopped the market from going up. You know, if the majority of investors don't understand the fundamentals and they buy stocks anyway, stocks can go up. But in the long run, the fundamentals are going to ultimately bring the market back down. And so you have to be prepared for that. You know, the U.S. economy is in a lot of trouble, much more than is generally perceived. I think we're on the verge of not just a financial crisis, but a U.S. dollar and sovereign debt crisis. So I think U.S. stocks, which are extremely expensive by any, conventional way to measure stock value, even the bulls will concede that they're expensive. They just expect them to stay expensive. But there's a lot of risk that when you're priced for perfection, you're not going to get it, and the markets are going to be repriced. And now you have the war, which I think people are underestimating the significance of this war, how much damage it's going to do to the U.S. economy, to the budget of the United States, to the credibility of the United States, and to long-term interest rates and inflation. So the markets, I think, are really looking past a lot of problems and pricing stocks based on hope and not reality.
So you said that investors need to prepare for the downturn. If you're right, how should they be positioned?
Well, they can take profits if they've been investing in the U.S. market for some time. They should have some nice profits. They should get out, and they should look to alternatives. One would be precious metals, gold and silver, but there are also stocks. You can get into resource stocks, mining stocks, precious metals, industrial metals, energy stocks, although they've run up a bit, but I still think they're going higher. Other commodity agricultural plays. Look at the emerging markets. A lot of value still there. And even developed markets outside the U.S. that I think where the stocks are much better valued, where you don't have these, sky high, valuations with these PEs and high PEs and low dividend yields. And countries that will benefit from the weakness of the dollar and strength in overseas markets.
So as they think about portfolio allocation, how much of the portfolio should be allocated to things like gold versus stocks? What does the 60-40 portfolio look like in a Peter Schiff world?
Well, I think you should have more allocated to stocks than gold, but the key is which stocks. I think Americans should have a greater allocation to foreign stocks. I would substantially underweight U.S. stocks, and I would, focus more on like energy companies, something like that. I think that there are much better values to be had outside the United States. The U.S. has had a huge run over the last decade, and it's very expensive. Even if everything was good, the U.S. market is expensive, but it's not. It's a ticking time bomb. So minimizing your exposure to U.S. stocks, I think, is a good idea. I'd have no exposure to U.S. bonds. I can't think of any rational basis why a long-term investor would want to own any treasuries or corporate bonds. The yields are just much too low to offset the risk either of default or inflation. So if you want to be in bonds, I would look overseas. We do have manage an international portfolio of foreign bonds, which has a much higher yield than U.S. bonds. But I think that your risk is lower in that I think those currencies are going to hold up better over time as far as the purchasing power that they're able to deliver.
So international over U.S., and I understand that from a valuation perspective, but what about from a fundamental perspective?
Yeah, both. I mean, fundamentally, and that's what valuations are a part of. They're a reflection of the fundamentals. The other way to look at stocks would be technicals. And I think even there, the technical picture for the U.S. market looks pretty toppy to me. We've had a big run, and we could be consolidating in making a major top. That will cap the upside for a while. I think we've already seen that in crypto. I think Bitcoin, a lot of other tokens have already done that. They were actually bubbles, and now they've kind of popped. And there's still a lot of hope keeping much of the air in those bubbles. But I think it's all going to come out. And so the stock market in general is not as overpriced as something like Bitcoin, but it's similar in that the prices are much too high, and they're going to come down.
Bitcoin is 40% off the highs, but it's not broken. So what's the market seeing that you're not?
Well, I think it is broken. I think,
but I mean,
it's really
trading at 76,000.
Yes. Well, a year ago it was 110,000, and it got as high as 126,000. And look at what's happened over the course of the past year. Look at all of the Bitcoin that Strategy has purchased. Look at all of the Bitcoin that at least a half a dozen other copycat Bitcoin treasury companies have purchased. Look at all the hype that has come out of the Trump administration. Look at what's happened with the Trump family and how much they've embraced crypto and Bitcoin and what they've done. So you've had massive pumping of Bitcoin. You've got a Bitcoin president, a Bitcoin czar. You've got Bitcoin-friendly legislation that has been passed in Congress. You've got various states that have passed Bitcoin-friendly legislation. You've got a Bitcoin strategic reserve. You've got all of this good stuff that should have resulted in a higher price for Bitcoin, and instead it resulted in a much lower price. So that tells me that the smart money has spent the last year selling, and the Bitcoin has been accumulated by retail investors, by small mom and pops, by ETF buyers. This is a very unhealthy market. I mean, I think the whole story behind Bitcoin has broke. In fact, look at what Saylor has to do now. When a year ago, he was able to sell 0% preferreds, 0% interest, because people really wanted exposure to Bitcoin. He can't do that anymore because they don't want the exposure to Bitcoin. He has to bribe them with an 11.5% yield. So people are saying, I don't care about Bitcoin anymore. I don't want the upside of Bitcoin. Give me that 11% yield. That's what's going on. So the whole story is broken. Yes, Bitcoin is not at zero yet. You can still get a lot of money if you sell your Bitcoin, but no one's making any money buying it. It's not going to be the new gold. It's not digital gold. It's not going to replace the dollar. It's not going to replace anything. The whole thing was a giant Ponzi. It was a decentralized Ponzi, pyramid, blockchain letter. The fact that it gets so much attention from the financial community without criticism. The fact that the SEC is not coming after Michael Saylor, which is ridiculous. I mean, they would never let me get away with what they're letting Saylor get away with. They'd probably shut down my whole business if I was promoting something the way he is.
Okay, so you're not buying Bitcoin, but you are buying gold. And gold already had a big move, but it is, 20% off the highs. What actually takes gold meaningfully higher from here?
Well, the same things that drove it higher in the last several years. I think that gold has been driven by a de-dollarization trend that has focused mainly on foreign central banks, but I think will spread beyond that. I think retail investors are going to start buying gold, maybe in a small way at first, but they'll buy more over time. And of course, private institutions, I think, are going to be buying gold. I think a lot of the money that may have gone into Bitcoin will start going into gold now that the wind has come out of that Bitcoin sale. I think more people are going to look at gold that might not have looked at it. But gold has done very well. For all the naysayers, gold has outperformed the stock market over the past 26 years since the century began, and it's not even close. The stock market is down better than 70% price in gold, so that is a big decline.
But how much higher can it go from here?
This is a major bear market.
Yes, so how much higher can it go from here?
Or how much lower can the market go? A lot. I think the market is still very expensive.
Yeah, but gold was hitting all-time highs at the same time that the market was, so it didn't necessarily move in the direction that you would think. Why can't that keep happening?
But gold was going up faster than the market. So in relation to gold, the market was going down. See, that can be very confusing. When you have inflation, prices tend to go up. The price of everything goes up. But that doesn't mean that things are getting more valuable. It just means they're getting more expensive. What you want to do is look at the price of gold to see what's really happening to prices, because gold is a neutral arbitrator of what's actually happening. And so when you start measuring prices in gold, when you start measuring assets in gold, you realize that prices are actually falling. But in terms of the fiat currency that the Fed creates out of thin air, of course prices are going up. But it's not the prices that are changing, it's the value of the fiat currency that's changing. The fiat currency is losing value. And so you need more units of that currency to buy the same quantity of goods or assets.
Peter, you've called this an everything bubble. What's the first thing that's going to break?
Well, I think crypto is already broke. It just hasn't collapsed. The bond market has broke down too. I think if you look at where yields are compared to where they were a few years ago, in fact, yields are much higher today than they were before the Fed started cutting rates. So I think the bonds have already broke. They haven't just broke down. Stocks, of course, haven't even broken yet because they've just hit new highs. So I think you've seen a breakdown in crypto, a breakdown in bonds. I think the dollar hasn't really broken down, but it's topping out. And gold is clearly broken out. So has silver. I think oil has too now. I think, and other commodities. Look at copper. So I think this is a breakout in the commodity markets. And generally a commodity bull market is not good news for the bond market. And if we're going to have a bear market in bonds, it's going to be hard for the stock market to shrug that off.
Do you believe that AI is included in the everything bubble? Is AI a bubble? And should investors have exposure to names like Nvidia in their portfolio?
Well, I don't know if AI itself is a bubble, just like the internet wasn't a bubble. But many stocks that got caught up in that as .com stocks, there was a bubble there. Just like airlines, railroads weren't a bubble, but there was a bubble in railroad stocks. I mean, railroads did a lot to transform America, but that didn't stop the valuations from getting ridiculous in those companies. So I think what we have in AI is a bubble. So which names do you think are safe? And sorry to interrupt you, but which names do you think are safe from a bubble popping, and which would you expect to not be talking about years down the road? Well, AI itself, to me, is the most transformative development or technology that I've ever seen. And so I think the potential for AI to improve humanity's standard of living, to make life on Earth better, to raise the standard of living of everybody, particularly the middle class or the lower class, I think is incredible. But that does not mean that, the companies that are raising so much money, many of them still through private deals, they're not even public yet, but a lot of them are, that the valuations are probably way out of line with what those companies will end up being worth. It's a very competitive market when it comes to AI. It's going to get a lot more competitive, but who knows if the massive amounts of money that are now being spent on building out the infrastructure, on the data centers, if this money is not just malinvestment, if this money is not just a waste, if these companies are not going to be maybe even at a disadvantage over other companies that haven't spent so much money on stuff that may not even be necessary. We don't really know how this is going to play out. But I do think it's also probably going to happen at a slower pace, even though the technology is improving so rapidly as far as how much better it gets. It's not like everywhere I look, I see robots. And, AI is helping certain aspects of my life. I use it, I do things, but it's not so transformative yet. That doesn't mean it doesn't have the potential over time to do that. But I think that the people who are really excited about it are underestimating how long it's going to take to get the real benefits of AI. In the meantime, all those benefits are being priced into a handful of stocks as if they're going to be the beneficiaries. But it should be average businesses that end up benefiting from AI.
Do you have exposure to those stocks in your portfolio?
Well, look, personally, I have some exposure to like tech stocks. Like I own Taiwan Semiconductor myself. We own that in our emerging market fund. Obviously, TSM benefits because it makes all this stuff, right? A lot of the stuff, not Nvidia's GPUs, but it makes a lot of these chips. I have other companies. Personally, I own this company called Delta Electronics, which is now the biggest company in Thailand. When I bought it, it was pretty insignificant. It's now about 100 times what I paid for it. And the reason it went up so much was because it really got into AI. Now, I probably should sell it, but I haven't. I just I've hung on to it. And I have, a tremendous gain in it. Obviously, percentage-wise, it's the biggest gainer in my portfolio. It's not quite the biggest position in my portfolio, but it's one of them. It's one of them. But
do you have any Mag 7 in your portfolio?
Huh?
Do you have any Mag 7 in your portfolio?
No, I don't. I don't have any of the Mag 7 names in my portfolio, nor did I have them on the way up. So it's not like I was so smart. I got in, I made a bunch of money in Meta or Microsoft or Nvidia, and I got out. I just never even got involved in them. But I own other techs. I own Singapore Technologies. I mean, I own some of these companies. I just tend not to buy what everybody else is buying.
Yeah. And but did you get any FOMO on the way up? Especially even lately.
In the short run, it can cost you something to not buy what everybody is buying. Because if everybody's buying it, it can push up the price. But at the end of the day, that usually doesn't end very well. You have a big collapse. You have a lot of bag holders. I'm a value and a contrarian investor by nature. And generally, they go hand in hand because the best way to buy value is to buy what other people don't like, because that's how you can get it cheap. And so that makes you a contrarian. You're looking for value that other people don't see. And then you buy it and you wait for them to figure out what you already know. And so that's our whole strategy with the company. That's how I invest personally.
Okay. All right. We're just about out of time. I want to get to our rapid fire game of this or that. Our viewers love that. One final question, though. If you have $100,000 to allocate today, where are you putting it? How much in gold?
Well, where am I putting it, or where should your typical guy with $100,000, he should be investing it in my funds, the Euro Pacific funds. I have a whole family
your fund
of funds.
decide.
Yeah, well,
I guess I set you up for that one.
I got an emerging market fund, I got a gold fund, I got a global value fund, a global dividend payers fund, and a global bond fund. That covers everything. That covers your whole $100,000. You get a complete diversified exposure outside the United States.
Where are you putting it then? How much in gold?
Well,
how much in emerging markets?
I have my money in the same stocks that are in these funds. I have a few others that are not in there, but by and large, I eat more of my own cooking than any of my clients.
Okay, and just finally, what has to happen for you to be wrong?
Wrong about what?
Your entire thesis that stocks are going down.
Well, there's no way.
Bitcoin is going to
I'm wrong
zero.
about my entire thesis. I don't think that there's a chance of that. I mean, so many things. Look, I've been in this business 30 years plus, but so many things that I have predicted over the years have already come true. Things that the vast majority in the mainstream media, at Wall Street, the big name firms, in the government, whether it's people on the Fed or people as part of the presidential economic advisors, so many things that nobody else saw coming, that people in fact specifically said were impossible to happen, that I predicted have already happened. So much has already happened to validate what I've been saying, that the odds that this is all random coincidence and that I'm somehow wrong, I think are very slim. The only thing that hasn't happened yet is the ultimate collapse, the ultimate crash that is the consequence of all these forecasts that have already come true. So the only thing
Yeah.
is the timing. I don't know exactly when the whole thing is going to implode, but all the pieces of that puzzle are coming together. All the things that I've been saying would happen are happening or have happened. So
Okay, so
no,
let me ask it
I
a
don't
different
think I'm
way.
wrong. I could be early.
Yeah, no, I meant what
Yeah.
would make you wrong. But let me ask it this way: what would make you bullish on stocks from here?
Oh, well, on U.S. stocks.
Yes.
Well, if they went down a lot, then could get bullish. I mean, obviously, if they got cheap, I would get bullish. And I still think over time, U.S. stocks are going to go up, just like they've been going up for the past 26 years. But in terms of gold, they've been going down. And that's what I've been telling people. It doesn't matter what happens to the nominal price of your stocks. What matters is, what are they worth when you sell them and you want to go buy stuff? And I think that U.S. stocks are going to keep losing value over time, especially if you want to sell them and buy gold. But so I would rather invest in foreign stocks, in commodities, in other investments that I expect to outperform the U.S. stock market, even though I expect the U.S. stock market to outperform the dollar.
Okay, so perfect time to transition to our rapid fire game of this or that. This is quick questions, quick answers. Usually there's one or the other. It's called this or that. Are you ready to play with us?
All right. I thought we already started, but let's go.
The current rally, real or a setup?
Setup.
Stocks long term, bull or bear?
Priced in gold, bear. Priced in dollars, bull.
Inflation, peaked or persistent?
Persistent and going to get higher.
The Fed, hike again or forced to cut?
They should hike, but they'll probably be forced to cut.
Resilient economy or recession delayed?
Recession, maybe depression.
When does that show up? 2027?
I think we've been in a recession for years. The numbers just mask it. But officially, when would the recession start? I don't know, maybe this year. We'll see if they can stop it with the midterms and a stimulus plan. So either this year or 2027.
U.S. or international markets?
International.
Cash or hard assets?
Hard assets.
Gold at 4,500. Buy the dip or wait for 4,000?
Buy the dip now, and if it goes to 4,000, buy more.
Physical gold or gold miners?
Both.
Silver, catch
But
up
the
or
miners are
overhyped?
cheaper. Excuse me?
Silver, catch
Last
up or
question.
overhyped?
Buy it. It's a breakout. Buy this dip.
AI, opportunity or bubble?
Both.
Nvidia, generational leader or peak hype?
Peak hype.
Real estate, high rates kill the market or inflation keeps prices high?
Well, it's a combination of both. It depends on the market, the location, but I would still avoid U.S. real estate.
And finally, a value stock that others don't like, but you do.
Well, pretty much almost all the miners, I think, at this point are value stocks. But there are a lot of individual names out there that are in our portfolio, so it's hard to pick one. But
Can you give us? Okay, give us three.
Yeah.
I said give us
I don't know.
three.
Just,
If it's hard
I
to
don't
pick
have
one,
enough
give us
time
three.
to just come out with what I think are the three most undervalued stocks, in the portfolio. People, but there's a lot of names that we like. Anybody could just go to Morningstar and look at our funds and pull up the holdings and see what we got in there.
All right, it's time to Google.
Public record.
Peter Schiff, Chief Economist and Global Strategist, Europac.com. Thank you so much. Appreciate you playing along and appreciate your perspective as well.
Sure thing. Take care.
For a totally different view, check out our Street Talk with Nancy Tengler as she breaks down why she's bullish on the market and gives names she's buying right now.